Set. How did a coffee startup, hailed as the next Starbucks, lose 90% of its value overnight? This isn't just a business story. It's a tale of ambition, deception, and a multi-billion-dollar fraud that shocked the world. Welcome to the rise and spectacular fall of Luckin Coffee. Back in 2017, Luckin Coffee burst onto the scene in China with a revolutionary idea, a tech-driven app-based coffee experience. No long lines, no cash, just grab Bango coffee at incredibly low prices. They opened stores at a mind-boggling pace, sometimes 3 new locations every single day. Investors were hooked. They saw a company challenging Starbucks' dominance in one of the world's biggest markets. In just 18 months, Luckin went from its first store to a flashy IPO on the NASDAQ in the United States, raising over $500 million. The dream seemed real. They were valued at billions, and their blue and white cups were everywhere. But the dream was built on a lie. The first red flag was their business model itself. They were burning through cash, selling coffee for less than it cost to make. Their strategy was aggressive growth at all costs, funded by massive amounts of investor money. They claimed this was to capture the market, and once they had a loyal customer base, they would raise prices and become profitable. It sounded plausible, but the numbers just didn't seem to add up for some observers. The bombshell dropped in January 2020. A well-known investment firm, Muddy Waters Research, published an anonymous 89-page report. This report was a masterpiece of investigative work. It alleged that Luckin Coffee was a fraud, claiming the company had massively inflated its sales figures. The anonymous authors didn't just guess. They had organized a team of over 1,500 people to secretly monitor Luckin stores. They stood outside, manually counting customers, collecting thousands of hours of video footage, and gathering thousands of customer receipts. Their findings were explosive. They claimed Luckin was faking at least 69% of its sales. First, Luckin vehemently denied everything. They called the report misleading and malicious. The market was split. Who do you believe, the hot new tech company or an anonymous report? But the truth couldn't stay hidden for long. Just a couple of months later, in April 2020, Luckin Coffee shocked everyone. They admitted that an internal investigation had found that their own chief operating officer, along with several other employees, had fabricated sales transactions starting from the second quarter of 2019. The total amount, a staggering 2.2 billion yuan, or about $310 million. The fallout was immediate and catastrophic. The day of the announcement, Luckin's stock on the NASDAQ plummeted by over 80% before trading was halted. Billions of dollars in market value vanished in an instant. The company was delisted from the NASDAQ, a huge embarrassment. Executives were fired, and the company faced investigations, not only in China, but also in the United States. They were hit with a $180 million penalty from the U.S. Securities and Exchange Commission, the SEC, to settle the fraud charges. So, what were the key mistakes here? First, a culture of growth at any cost. The pressure to show constant, explosive growth led executives to cheat. Second, a massive failure in corporate governance. The checks and balances that are supposed to prevent this kind of fraud were either non-existent or completely ignored. The board and auditors seemingly failed to catch a deception of this magnitude. The global impact was significant. This scandal severely damaged the reputation of all Chinese companies listed on U.S. stock exchanges. It created a wave of distrust among international investors, making it much harder for legitimate Chinese businesses to raise money abroad. It also led to stricter regulations in the U.S., with new laws passed to increase oversight of foreign companies listed on American exchanges. But here's the crazy part of the story. Luckin Coffee didn't die. After a massive restructuring, filing for bankruptcy protection, and paying huge fines, they are still operating. They closed down unprofitable stores, changed their management, and focused on a more sustainable business model. Today, they actually have more stores in China than a shocking comeback story. But the scandal remains a powerful lesson about the dangers of unchecked ambition and the importance of honesty in business. It shows that no matter how fast you grow, a foundation built on lies will eventually crumble. What do you think? Can a company ever fully recover its reputation after such a massive fraud? Let me know in the comments below. Thanks. for watching, and if you enjoyed this deep dive, don't forget to like and subscribe for more stories from the world of business.